All right, ladies and gentlemen, let's go ahead and start with this week's broad market analysis. It is 12 o'clock Central, where I live here in Florida. It is April the 30th, and I'll be covering April the 30th into the 5th of May. As you can see, we have a lot going on as far as earnings are concerned. I circled a couple names that I was interested in. And of course, these are names that I'll probably keep on watch for intraday trading purposes. And then I'll look at some of the strong names from last week to potentially sell some call credit spreads. And again, we'll see some of that as we get started this week. First names on Monday. SoFi, these guys are known to beat on their earnings, so I'm definitely interested to see how they do on open tomorrow. And if it's a gap up, maybe potentially play a gap up trade there. Then we have Norwegian Cruise Lines. Definitely interested there as I feel these things have been beaten up for quite some time. Same thing over here on MGM. And then Tuesday, the most important names for me are going to be Uber, AMD, Ford, Pfizer, Starbucks, the Marriott. I want to see how hotels are doing, especially as we get ready to go into the summer months. And then on Wednesday, you can see here we have CVS, Qualcomm, all right, and Wingstop. And then moving down, Marathon Oil. Melissa loves to trade that. Etsy. And then on Thursday, we have Apple, Big Apple, Datadog, Shopify, Moderna, Royal Caribbean, Coinbase, DraftKings, Peloton, Lyft. I mean, the list is really great. Now, while we're sitting here and I'm staring at Thursday, I want everybody to know I am going on vacation. I am flying out Thursday morning to Texas. I'm going to be involved in a wedding there, my wife and I, and that's going to be absolutely a blast. I have not been to Texas in a very, very long time, so I can't wait to get back there. But we'll be flying back on Saturday night. And I will have my laptop with me, of course, to kind of monitor Apple and so forth, and Shopify and all these good names. And again, all these big names that are reporting this week, we'll be looking at intraday trading them if they set up. And again, I would focus on that in the mornings. And I'll give you those charts and my plans and so forth as we head into this week. Okay. Next thing that I want to go ahead and take a look at is going to be the market watch. And I went ahead and circled what I feel, all of this stuff is important and can cause a little bit of volatility in the market. But I want you to understand, and I want to reiterate this, that the news is just a catalyst that pushes price to supply and demand or to the edges. Okay. So all these things, whether they're good or bad, in my mind, are always good because they are setting us up to take a trade out of these zones. So on Monday, we have PMI, ISM, construction spending. Tuesday, U.S. job openings, factory orders. Wednesday is kind of a big day. We had Fed Chair Powell on the mic. He's doing a presser that comes in at 2:30 Eastern time. We have ADP employment there first thing in the morning. ISM services as well. Let's go ahead and move into Thursday. You can see here U.S. productivity, U.S. trade deficit, initial jobless claims, continuing jobless claims. And remember, this is coming into the same time period as Apple, Shopify, and those guys reporting. So it should be fun. Friday, 5th of May, we're looking at U.S. employment report, employment rate, hourly wages, consumer credit. So this week should be really interesting from a standpoint of not only econ data, but also some great names reporting. Next thing that I want to go over is going to be the SPY and QQQ neutral strategy. And again, if you don't know how to trade the neutral strategy, I have a video on my YouTube page. It's just a couple minutes. Take the time to watch it. It can help you out. If you have any questions, just reach out to me. But you can see here, and I'd like to go over this just so that we can kind of grade how things went, is that the SPY did not give you any kind of trigger to go long here, okay? It actually gave you a trigger to go short, and you end up hitting T1 and T2. And if we go to last week and we look at last week's broad market analysis, we talked about buying the dip, and these are the areas where we'd be looking at buying the dip. Buying the dip down here at the second target worked out really well. You can see price pushed up very nicely. You can look down here at your TTM squeeze and see that thing set up once the yellow bars started coming in. And once those yellow bars started setting up, and then we broke through the EMA cloud, that EMA cloud became support. And then we headed and then hit our trigger actually on Friday, breaking 414.09 and then hitting our first target of 415.70. Now, just as a disclaimer, just because we did not hit this until Friday did not mean we waited until Friday to get long. Matter of fact, most of the week I was net long. Over here on QQQ, let's go ahead and go over that. You can see the same thing. It did break for a few minutes, I would say, to the upside, but could not close above. We then headed down, broke below. We got the trigger short. We did hit T1, not quite T2. That T1 really held 310.96 quite well. We started to make higher lows here. We broke through the EMA cloud. And as you can see, we triggered a little bit earlier than the SPY. We broke over 317. We hit 318, 320, and 321, meaning all three targets. So this did work out very, very well. Next thing I want to be looking at is the SPY and QQQ neutral strategy for this upcoming week, again, from the 30th of April into the 5th of May. Notice that price of a trigger long is above 416.5. You could see 418.36, 420, and 423. Remember, all lines to the upside are resistance until proven otherwise, and lines to the downside are going to be support. We're going to get into the bigger picture of SPY and QQQ, so please understand that just here in a few minutes. And maybe some of these levels will make a little bit more sense to you. The neutral over here on the Qs, 322.95 is your trigger long. Could see 325.14, 28.12, 330.15. All these are resistance till proven otherwise. And because we have such a robust amount of earnings this week and Big Apple reporting, and we have a lot of econ data, I would expect some volatility between these levels. But most of all, the sentiment is the same. Looking at buying the dip, the market looks bullish until it's not. And there are major levels I want to cover with you on the higher time frames. Let's go ahead then move into the SPY, the bigger picture here. A couple notes, and I went ahead and have annotated these on the chart. This is a quarterly chart, folks. So please understand that every candle is showing you a quarter. And right now we have 2 months and 1 day before this candle closes. So we cannot say whether or not this candle is going to close bullish or bearish until that candle closes. Information that I'm giving you is based on the Fibonacci that I teach and supply and demand. Price remains in the bullish channel, and after all this time, you start to understand why these fibs are so important in my methodology. When the masses were hell-bent on a crash, we just followed the levels. And as I said, folks, all we did was measure the range. And as long as it can hold above the 618, that specifically means that this trend that was created back in 2020 is not even broken. And this is where I feel we have an edge over the masses. Then we start to move above the 38.2, which was 390 and a quarter. Then we start to get bullish. Not only do we get above the 38.2, but prices are breaking above the EMA cloud on a quarterly chart. And as long as they hold them, I believe price continues to move towards the 424.62 level. Let's go ahead and move on now and head into the QQQ, which is another bigger picture. My notes here, quarterly chart, price holding the 38.2, and as long as it does, expect the 23.6 to test. Timing is the variable. What do I mean by that? Once again, this is a quarterly chart. We have 2 months to go. It's hard to say when this will be hit, but as long as price can hold the cloud and hold the 38.2, we're looking for 346.87. Notice above that we do have a quarterly supply zone based off of formations, and that is 362 by 409. Right now, your immediate support would be the 38.2 or 309. 309 being your support, EMA cloud being your support. Let's go ahead and move into our next chart. This is going to be the US dollar. Nothing has changed, no new notes, but I will go over this. Basically what you're seeing here, okay, is I'm looking at this trend to the downside. Now, we forecasted this move a long time ago. We were dead on. We waited for it to get to the inside and up, and as soon as we noticed that this candle was going inside, we had the idea that the market would actually start to then push up as the dollar went down. Where was the dollar moving down to? All we had to do was take our eyes down and to the left, and we found this inside and up formation. And notice that ever since price has come into the inside and up formation, it's basically sat there. Now, this still is a yellow flag, folks, because it's still in a demand zone and it can pop at any time. Please note that. Now, far as alerts go, I'm really just interested if the dollar starts to go below 101.10. Okay. And you could round it, it could be just 101. All right. But if we take out this low, then I do believe the market can continue to push to the upside and really get into that extreme greed that we will see on the fear and greed index. And I'll show you that here in a second. Okay. Now, if price does pop, notice that I have some Fibonacci's here. Basically, all I'm doing is measuring from here to here. And this is called the bear channel, not the bull channel. This is a downtrend. If price starts to bid above 103.88 or even gets back above 105.77, then that is extreme caution. But by then, we'd probably be in our first or second week of a downtrend in the market. Okay. So again, the caution comes in right here. But just because I say caution doesn't mean that we don't trade to the upside. And I'll go further into this here in a few minutes when we look at our future charts. The next chart that I want to show you guys is going to be the TNX or the Treasury. Again, as I said, timing is the variable. I'm anticipating that we could see this start to pull back into 3.2 and possibly back to 2.9 in the future. Timing is the variable. Okay. Notice that I have some arrows here. Yes, they are pointing down into demand. Again, timing is the variable. If the TNX starts to bid, obviously above the structure up here, I would be concerned basically above 4. Okay. Now, let me go ahead and read my overall sentiment, please. Well, first of all, before we do that, let's start with last week's. I remain neutral and excited for this week's earnings. So again, I'm reading last week's sentiment. I remain neutral and excited for this week's earnings. Big names reporting and more reason for me to believe we are at a sit and wait type of period. Technicals say bullish, but caution since we can't seem to build value above supply. And as long as we are in supply zones across the board, it's a great time to concentrate on few names such as SPY, Qs, SPX, futures, and names reporting earnings. And I feel we did just that. Now, was I wrong in my overall sentiment? The only thing that I would grade myself on and say is that, well, first of all, we said the technicals say bullish, all right? But caution, the word caution could throw some people off. But again, my focus is smaller, meaning smaller and fewer names, not to get overextended. But the market did rip, and it was a beautiful rip, but it also pulled back before it ripped. So it's not like it's been easy per se. You just have to find the right zones. Now, this week, let's go ahead and start with my sentiment here. After another exciting week, the market continues to the upside. The lower timeframes have come back to demand and showed us that the bulls are in charge. I don't know about you, but I can hear the moans of many bears out there. I'm reminded over and over to stick with supply and demand and with price action, not the ideas of talking heads. Earnings, Big Apple, AMD, Pfizer, CVS, QCOM, Shop, Starbucks, Cigna, Coin, Piton, Lyft. That's just to name a few. It's going to get exciting. Just super exciting. The ES Weekly is currently, and let me go ahead and get over to this. Right here is your ES Weekly. Let's go ahead and open that right there. Is currently working on an inside and up. Now, it did close as an inside and up, folks, but what I'm trying to say by currently is working is this is a beautiful candle. It's definitely a beautiful candle, okay? But it's not moved quite some ways to the upside yet, okay? And what I mean, and let me draw it out for you if I can find it here. Give me 1 second. And we're going to try and, oh, I see what's going on here. Give me 1 second. There we go. right here, this candle, okay, although it's an inside up formation, I would have felt a lot better if the candle was a lot bigger. This would be a strong inside up formation and we would look for continuation. But since it's just now trying to get over this last wick, it is not necessarily the strongest inside and up formation that I've seen. But this wick down here lets us know that, support held really well. Now notice that on here I said support now. Okay, so what I did was I shrunk the red box, I brought it up to our automated level, and I'm saying that your immediate support is 41.64. Okay, but we are still in supply, and that's still a caution for me. Listen, folks, I've been here many, many times before. And what's difficult for some traders is they're like, hey, we're in a red box. Like, I'm afraid to do anything. Now, as long as we enter that red box and hold that proximal line, in this case, for this week, it's going to be this blue dotted line. As long as we could stay above there, I want to stay long. You just have to understand at any point, the market could push you out of this box into the downside. Okay. So again, just like last week, the idea is to be concentrated on fewer names, not be too overextended, right? And to make sure we can concentrate just on a few names. Last week, I had a few questions around when do we short. Just remember that earnings create a different dynamic, and it's important to understand that many institutions, etc., are waiting to hear forecasts and results. So what is the reward of shorting in the middle or the beginning of earnings season? It's almost like the same thing every earnings quarter. They give you this look where it feels technically like you're like, I'm not really trusting this, but you have to think about what everyone's doing. We don't really know what's happening until we hear the report and see the results. So price action is always king, okay? I will say there are reasons to think we could see our next wave down, maybe 1 to 3 weeks out. But from now, again, guys, as long as price is holding in the box, we stay long. And if for some reason price breaks through the box, then what was resistance, does it become support? We could see next week come in and then hold this level. And then we could see the next week push up. We don't know that yet. So again, very important to look at this from a week to week basis, understanding the bigger picture. We're in a bullish channel and that the dips into demand are buying opportunities. Let's go ahead and go to the smaller now into futures for now. You have now seen the weekly chart. These charts have been working phenomenal. Okay. These are new charts. I've changed just a couple lines. This is your bigger support between 4,113 by 4,057. And again, you're still in supply, but as long as we could stay above that blue dotted line, I want to stay long-minded. Over here on the daily, these have worked very well. And if you go back and look at last week's charts, you'll be really impressed. But I think a lot of you are used to this, so let's get on with this week's. Our long triggers have moved 41.76 by 54. If price moves back to there, you can see that we have the EMA cloud there for support. And this is also using some Fibonacci. Notice that the first trigger is over here at the automated level. So again, I would be looking for this to be support until it's not. Resistance, the reason why I put resistance here, guys, is if you follow my crosshairs and we go across, it's the top of this cloud, but it's also basically like a trend line that is touching all of these candles. And we can see that there's a lot of topping wicks here. It would be not the best thing for me to ignore these levels, okay? So I have to put some sort of resistance warning here. Now remember, I'm always looking at the smaller time frames to use the trigger levels. So again, TTM squeeze plus edges, or in this case, plus these levels that I'm giving you. And what I do is I take this as soon as price hits one of these levels, then we're coming into a smaller time frame to watch the TTM, and you guys can watch me do that live, okay, when we get there. The short trigger, just because it says short trigger, again, once we go to the smaller time frames, it has to line up in order for me to actually go short there. Same thing if I'm going long down here to the downside, guys, okay? Now here's your 4H or your 4-hour levels. Notice that your demand level comes in here. We have an inside and up formation. All right, there was an explosive move here. We always want to be taking note of that. Notice that price did come back in those last 4 hours of the market, most likely right into about 23 to 40% of this move, and then right back up. And matter of fact, guys, I don't know if you realize, but on our SPX, we basically were looking for a pin of 4170, I think it was, and they closed at 4169 and some change. So the trendy edge was right on par. We were right. So that was a really nice move on Friday. Okay. Now your supply zone on the 4 hour, 4207 by 4244. I'm looking way to the left and finding those zones. And down here is going to be your demand zone for the 4H. Now let's go ahead and take a look at the NASDAQ, all right, and see what we got there. So we're going to click right there. And let's go over to the weekly. And there we go. Nothing's changed on this chart. I did put a dotted line on there just to show you where this wick is. We're not quite there. It's at 13,348. I just be cautious there. Kind of like a little double top, if you will. But just like the ES futures, we're looking, as long as price can hold above this proximal line here, look to stay long. We could see targets at 13,513, 13,743. And if for some reason we reach back to 12,867, I'd be looking for support in this area here. Moving on, let's go ahead and take a look at the daily. Same thing, guys. These are triggers. Once we hit those triggers, we go to a smaller time frame, anywhere between a 1 and 5 minute on the TTM squeeze to get our signals. And again, treat these all with the same respect. Let's go ahead and move on. Now, one thing here, I did not change the supply level. So we're in that supply, so I want to leave it alone. And if for some reason, it pulls back, then you'll understand why. But on the smaller time frames, if we look up and to the left, all right, I'm just using this wick over here. If we start to bid above 13,351, we can continue to stay long. And if you have any questions or you're looking for more targets, I would just come over here to the daily and be looking for that next resistance target at 13,407. All right. All right, folks. So once again, a reminder, on Thursday morning, I am flying out to Texas for a wedding. I don't think my flight leaves until about 10, but that means that most likely I'll be on at 8. Maybe I'll be on at 8 on Thursday morning and give you like a quick rundown of what I expect for the morning, but we will be headed to the airport right after that. Okay. And I'll let you know if I, for sure can be on at Thursday morning. Okay. All right, guys. Well, that's my overall sentiment. These are my charts for this week. If you guys have any questions, please let me know. And please don't forget to hit the like button here and also subscribe. And if you're interested in trading with me, check me out at Simpler. And I will definitely be there. All right. We are in the day trading room. And I hope to see you guys over there. So simplertrading.com. Hope to see you there.